Ethereum just smashed through key resistance levels, breaking past $3,750. But the big question now is, can it break the next barrier or is a pullback coming? In this video, we're breaking down the critical resistance zones that stand between ETH and a run towards all-time high of $4,868. We'll analyze fresh on-chain data, including exchange inflows and outflows, ETF net flows, the average investor entry price, and Ethereum's realized price. Then, we'll zoom in on whale activity, who's buying, who's selling, and what the smart money is signaling for the weeks ahead. And with the recent signing of the Genius Act, the first U.S. federal law regulating stablecoins, we'll assess what that might mean for ETH's stability and institutional dynamics. If you're holding ETH or planning to get in, this is the data-driven breakdown you don't want to miss. Before we dive deeper, let's quickly break down what resistance means in technical analysis. Think of it like a ceiling, a price level where selling pressure tends to outweigh buying momentum. It's where the bulls pause and often where the bears push back. These zones usually form after multiple failed attempts to break higher and are often set around psychological milestones, like $3,600, for $1,000, or $5,000, because that's where many traders place-sell orders. When Ethereum breaks above a resistance level, it can act like rocket fuel for the next leg up, but if it gets rejected, we could see a sharp pullback. Let's break down Ethereum's key resistance zones, the price levels that could define the next breakout. First, we start with the $3,600 to $3,674 range. Ethereum recently entered the zone, and it's now acting as short-term resistance. A clean breakout here would signal renewed bullish momentum. Next, we hit the $3,700 to $3,730 level, a critical supply block and former monthly high. This is where a lot of sellers may step in, so expect possible consolidation or a brief pullback. Then comes the $3,980 to $4,100 zone, what analysts are calling the next major resistance ceiling. If ETH can close decisively above this range, we could see the bulls eyeing the bigger target. And that brings us to $4,000, a powerful psychological milestone. Round numbers like this tend to attract attention and volume. Finally, at the top of the chart sits Ethereum's all-time high at $4,868. This is the ultimate resistance. A breakout beyond this level wouldn't just be technical. It would be symbolic. It's the long-term target everyone's watching. Here's how these resistance levels evolved. The 0.02425 BTC level, once a critical ceiling, was successfully flipped into support, paved the way for Ethereum's broader altcoin rally. The pair then met stiff resistance at 0.02534 BTC, a level it tested 3 separate times, but failed to break, solidifying it as a strong technical ceiling. Then in July 2025, ETH/BTC surged to 0.0267 BTC, marking a multi-month breakout, signaling renewed bullish momentum. Historically, Ethereum's highest ever ratio against Bitcoin was 0.157 BTC back in June 2017, while the lowest point hit 0.002 BTC in late 2015. So over the past 4 years, ETH/BTC has broken above 0.02425, struggled at 0.02534, and surged to 0.0267, forming a bullish continuation pattern. With these key resistances now tested or flipped, Ethereum looks technically poised to push higher, with 0.03 to 0.035 BTC likely being the next battleground. Here's a 6-month snapshot of Ethereum's on-chain exchange flows, and the story is clear. Supply is shrinking. In January, over 350,000 ETH left exchanges, signaling early accumulation. That trend only intensified through February to April, with outflows hitting 650,000 ETH. Then came May, where more than 800,000 ETH were withdrawn, but the real headline was June, a record-breaking 1.2 million ETH in net outflows. According to Crypto Quant and NFT Evening, total June withdrawals surpassed 3.8 million ETH. Institutions, whales, and long-term holders were piling in. And it didn't stop there. July continued strong with another 900,000 ETH pulled off exchanges. But here's the twist. While ETH supply on exchanges is falling, fund inflows into exchanges are increasing, not to sell, but to buy Ethereum. That's right. Fresh capital is coming in, chasing a shrinking asset. This classic setup, decreasing supply and increasing demand, is a recipe for price acceleration. With less ETH available to trade and more buyers entering the market, Ethereum is being primed for a major breakout. Let's break down Ethereum ETF inflows over the past 6 months. It's a story of accelerating demand. January saw modest inflows, around $150 million, as spot ETH ETFs first launched, a sign of initial institutional interest. By March, that grew to roughly $400 million, reflecting steady capital entering the market. In May, inflows reached around $600 million, at times outpacing Bitcoin ETF inflows, which signals a shift in investor focus. June's inflows exploded. Over $1.32 billion in just 2 days, the fastest billion-dollar inflow ever, driven heavily by BlackRock's ETH. And in July, the momentum continued. $2.18 billion in 1 week, and a record $727 million in a single day. That surge in capital isn't just hype. It's institutional money pouring into Ethereum, reinforcing a powerful buy signal as on-chain supply continues to tighten. While exact annual entry prices and holder counts aren't publicly available, on-chain data reveals telling trends. As of mid-2025, Glassnode's cost basis distribution shows a substantial accumulation cluster around $2,800 ETH, marking this as a major support zone for long-term holders. Meanwhile, institutional ETF investors, particularly BlackRock and Fidelity, hold their ETH at significantly higher cost basis levels, around $3,300 and $3,500 respectively. These averages reflect recent inflows into spot Ethereum ETFs, and according to Glassnode, they're now roughly 21% underwater. Although we can't track the total number of individual investors or ETH volume per year, these metrics highlight a clear landscape. Retail and on-chain accumulation centers are anchored at $2,800, while institutions are entering at lofty $3, $300, $300, $500 prices. This divergence emphasizes potential resistance or selling pressure in the short term, but strong conviction levels among long-term holders. From mid-June through July, Ethereum whales went on a historic buying spree, accumulating over 1.49 million ETH, with a staggering $5.4 billion. Leading the charge was wallet 0x9684, linked to FalconX, pulling in 122,691 ETH, nearly $500 million in value. Not far behind, wallet 0x35FB swept up 103,000 ETH from Kraken. Then came the institutional giants. Bitmine amassed 137,000 ETH, while SharpLink Gaming added another 91,000 ETH to their growing treasury. Together, they weren't just buying dips. They were sending a message. This wasn't retail. This was coordinated, high-conviction accumulation. In just 30 days, these whales and institutions soaked up ETH at a scale we haven't seen since the last cycle's bottom, effectively draining supply from the open market and tightening liquidity. Say what you will about Donald Trump, but his latest policy move, nicknamed the Genius Act, is sending ripples through the crypto world. This bill, officially the Digital Asset Fairness and Innovation Act, proposes massive tax exemptions for crypto holdings under $10,000, pushes pro-blockchain legislation, and removes the SEC's chokehold on Ethereum staking platforms. But here's where it gets wild. The bill also allows U.S. pension funds and retirement accounts to allocate into Ethereum ETFs, something previously restricted under older regulatory guidance. This could unlock billions in institutional capital, especially from 401k plans and government pension funds, funneling fresh demand into ETH while supply is at its tightest point in years. The result? A perfect storm for Ethereum. Between staking, whale accumulation, ETF flows, and now pro-crypto U.S. legislation, the road to $10,000 ETH just got a lot shorter. Ethereum supply is drying up, whales are buying, ETFs are booming, and now pro-crypto policy is entering the mix. Whether it's $5,000 or $10,000, The momentum is undeniable. If you believe Ethereum's next move is up, smash that like button. Drop your price target in the comments. We read every one. And don't forget to subscribe to Durian Finance for more no-hype, data-driven crypto insights.